Hi, I'm Courtney Murphy, Denver Metro Realtor, here to give you your March 2021 Denver real estate market update. Heck, it's almost the end of the month, so I figure I better get to it. It has been busy. Lots of houses being sold and being bought. And once again, I'm telling you, I'm feeling like a broken record. Every month I've been coming on and I've been telling you that our inventory is at a record low. And this month is no exception. Usually I'm starting out with inventory because it's the big story. I'm actually gonna hit that at the end because I want to take a little bit more time talking about it today. So I'm going to start out with average sales price. Oh, and I do want to remind you, we're looking at February numbers since I won't have March numbers until April, almost April. I need to get a little bit ahead of schedule here. Anyway, average sales price in the month of February was $553,774. That was up 0.99% from the prior month and up 19.44% year over year. Huge year over year gains we're seeing. Those prices are just going way up. So if you own a home, your house is going up in value. That number I gave you, that was a combination of single family or detached single family homes and townhomes and condos. So I wanted to break that down so you could have a more precise idea of average prices and what you're shopping for. Detached single family homes average sales price came at $632,581. And the average sales price for an attached home, a condo or townhome, came in at $552,000. That is the first time, now is the first time that detached or attached homes came in at over $400,000. So those prices have really increased. Now, I'm going to go ahead and go into inventory. If you're shopping for a home right now, you are definitely feeling the pain. It's rough out there. I have been a realtor 6 years. So the whole time I've been a realtor in the Denver area, it has been a seller's market. So really that's what I know. But in the 6 years that I've been a realtor, it's never quite been like this. It's really difficult for home buyers out there right now. Sellers, you're loving it. Home buyers, it is a crunch. At the end of the month, at the end of February, we had 2,024 homes on the market. That was down 12.61% from the prior month. And the prior month was a record. And this is down 12% more. So you can see this is, I mean, it's nuts. Down 58.14% from February of 2020. You know, we're seeing multiple house offers on most homes. You know, we do see some that, you know, make it through the weekend and don't have any offers. Usually there's a reason. Usually it's because the sellers were a little bit too ambitious and did price a little bit high. Maybe it's a home in a high price range, maybe 1.5 million or something like that, where just not as many shoppers, not as many of us with all that cash to throw out for a new home, right? Or there's something about the house that maybe just wasn't desirable. Maybe it has a horrible lot that backs to big power lines or something like that. So there are houses that we do see that make it past, you know, the weekend of showings. And usually there is a reason. Sometimes, if you're getting frustrated shopping, maybe some of those are some to take a look at, even if they're overpriced, and that's why they've been overlooked. It could be a great house, but maybe a little bit overpriced. That might be somewhere where you can come in and actually make an offer below list price, and you might be the only offer and have a little bit of luck. But in most cases, sometimes it's even hard to get into it to see a home. A lot of times, homes that are in a very favorable house price range are newly updated. The showings are filling up quickly, and in no time at all after being listed on the market, The weekend can be completely booked of showings, and with COVID in place, there are no overlapping showings allowed, and so if that showing slot is taken, you're not going to get in. Not only that, showings used to be very typical to set up a showing appointment for an hour. A lot of places are most places are limiting showings to 30 minutes and some 15 minutes to see a house and decide if you want it. Not very long. But the reason I wanted to take some extra time today is I did want to kind of talk about the things that people are putting in their offers to make them competitive. So let's go ahead and go through that list. Number one, escalation clauses. I use these in pretty much all situations when doing a multiple offer. And what an escalation clause is, it's like a bid up. You're bidding on the house. It kind of lets you come in really high, but a little bit of protection that you're not coming in much, much higher than everybody else. It basically, let's say a house was listed at $800,000, but you were willing to pay $875,000. Basically, an escalation clause would say something like this. You would come in and offer $800,000, and you would say, but I'm willing to pay $5,000 more than your highest offer, up to $875,000. So that what that's doing is putting you in a bidding position. That way, maybe the highest offer is $850,000. The next highest offer, below yours, is $850,000. You're going to automatically bid at $855,000 at that point. So good strategy to make sure that you're not coming in way too high, just a little bit higher than the other highest offer. Oftentimes sellers will get multiple escalation clauses where they are kind of bidding up against each other. Next is appraisal gap. So buyers will often offer to or put an appraisal gap in their offer, and in this market it's more and more common and almost expected. What an appraisal gap means is if a home appraises below purchase price, it's saying that you're willing to make up that amount in cash. Because as you probably know, that same $800,000 house, let's say you did get it for $850,000. What if it only appraises for $800,000? That's $50,000 that your mortgage company is not going to cover. So what happens at that point? Well, at that point, in a normal situation with no appraisal gap, you go back into negotiations with the seller over price. With an appraisal gap, it lets them know, hey, if this home appraises low, I'm gonna take cash out of my pocket and make up for it. Whether that's $20,000, $30,000, whatever you feel comfortable paying above and beyond where that appraised value comes in for that house. But like I said, more often than not, I almost see that as an expected in offers anymore. So be prepared, look at your cash and your finances, figure out where you want to come in with that. Next, I want to talk about inspection limitations. So a lot of people are putting limits on inspection. Some people are maybe stating that they will only ask for health and safety or major systems repairs, kind of letting the seller know that you're not going to nitpick on things. Another, which is a more aggressive move in your offer, is to say that you're going to take the house as is, and there's a way to write that really holds you to that. You can still have your inspection, but you're either going to take the house or you're going to leave the house. You're not asking for any repairs at all. Last and most aggressive, and I have had a client do this, you'd have to feel really comfortable to do this, but I have seen people say, we're not having an inspection. Very aggressive, but could get you in a little bit of a pickle, not knowing what's wrong if there is something major wrong with the house. Number 4, rent backs. So a lot of sellers would like to stay in their house after they close. So a lot of buyers are offering rent backs, and a whole lot of buyers are offering free rent backs. That means they're allowing sellers to stay in their home up to about 60 days is about the norm. And the reason 60 days is the norm is because your lender will only allow you to do it, rent back the house for 60 days unless you're purchasing it with an investor loan. So 60 days is typically the standard of allowing someone, a seller, to stay in the home after closing. And like I said, a lot of people are allowing the seller to stay there for free. Next one. Oh, this isn't really one that is a strategy, just more of one that I wanted to make you aware of, is what I have been saying is be prepared to go significantly over list price. If you're shopping in the 800,000 range and there are multiple offers, $10,000, $15,000 over in your offer is likely not going to do it. I've been seeing homes with offers that are going 10, maybe even 20% above list price. So keep that in mind that, you may be putting in an offer $75,000 above list price, and that may not be enough. Once you start shopping and making some offers, you're going to get a better idea of just how aggressive people are being in their offers. I know when I first start shopping with people, a lot of times they don't quite get it, but after a few offers, and you'll probably make some great offers, you'll start to understand just how aggressive your offer needs to be. Okay, the next thing I wanted to touch on is there are people who are offering that their earnest money go hard immediately. What does that mean? So when you put earnest money down on a house, you have several opportunities to get it back. Inspection, if inspection doesn't go right and there's no agreeing between the buyers and sellers, you can get your earnest money back. Appraisal, if the house does not appraise and you and the sellers cannot agree on a purchase price at that point, you have a chance to walk and get your earnest money back. Also, near the end, before closing, if you don't like the way your loan looks, the same thing. At that point, you also have a chance to walk and get your earnest money back. Making your earnest money go hard right from the start means that no matter what, if you walk or the deal doesn't go through, you forfeit your earnest money. Next thing to think about when making offers is your loan type. You've heard it before, cash is king. One of the reasons that deals fall through, one of the number one reason, I believe. I think number 2 was inspections. Number 1 is financing, is the reason that deals fall through. So obviously cash is king. If you have the cash to buy the house, that is the most solid way to purchase a house and guarantee to the sellers that you're not going to have a financing issue because you're not financing. Next, conventional or jumbo loans are the next best thing. After that, it's going to be harder if you have an FHA or VA or some type of loan like that. The reason why is they do have stricter standards. They do require the house to be in a certain condition to purchase it. So typically not quite as appealing to a seller. So maybe you're in an FHA loan, but you have the ability to go into conventional loan, then I would suggest that. And I do have some more tips to be more competitive, but some of the things that I keep for my own buyers. So that said, if you are planning to buy or sell a home in the Denver area, give me a call. I'd love to talk to you, see what you're looking for. Again, my name is Courtney Murphy, Denver Metro Realtor. Be sure to subscribe to my channel so you don't miss out on any of my market updates or home tours around the Denver area. Thanks for joining me today and have a wonderful day.